All right, so let's talk a little bit about the markets. Let's return to the money and fixed markets. Let's talk to the deputy head of research at Carry Asset Management, Victor Ofili. Victor, a good morning to you, and thank you very much for joining us via the phone.
Good morning, sir. It's a pleasure being here once again.
Okay, thank you. Let's start from where you are right now. It looks like Lagos, Nigeria's financial and economic capital, is in a total gridlock, spending hours in traffic getting to office. Tell us, how bad is it out there? You're stuck in traffic, you couldn't make it to the studios here.
Yes, I can't begin to explain it. Witnessed two major gridlocks. We just passed the first one, just descending the bridge, Third Mainland Bridge, and now we are stuck around Beja.
This is part of the scarcity of petrol products and been a weekend, as it were. How long have you been in traffic, as it were?
Okay, for like 10 minutes. Did I say 10 minutes? I think like an hour, close to an hour or so.
So it looks like a very terrible traffic early morning there for everyone.
Yes, it is. Quite tight.
I wish you could send us some pictures. We apologize for that, and that's what we've got to go through. But let's sit out in the car and talk to us about the money and the fixed income market. Yesterday, the central bank went out with about 50 billion naira open market operations, ending up with about 150, almost 160 billion naira taken off the market. Why this significant interest in treasury bills for this week?
Sorry, can you come again with the question? Second part of the question, please.
Yes, I was asking, the central bank went to the market yesterday with about 50 billion. That was what we had on the timetable, but eventually took about 152 billion or thereabouts from the marketplace. Why this significant interest in treasuries?
Okay, treasury bills, it's the only alternative in the sense that it's more secure, it's safer than the equities market, for instance. So investors would like to go for something safer, basically, and I think that's what informs the interest towards fixed income, not just money market instruments, also long-term debt instruments as well. So it's just part of the preference now. It's just one of the things that investors want to go for, rather than more riskier instruments.
But of course, what you will definitely see is interbank trending higher each time this happens. And for the current week, post-election, the stock market also been bearish for the last 4 sessions. Put all of this together, what the overall sentiments of investors are as we speak, especially for banks, pension funds, insurance firms.
Okay. It's a bit on a low key. Why? Because most of the banks have released a full year. Most companies have released a full year. And for the first quarter, the mixed reactions, because the companies did very well, some others were lagging. And so I think investors are waiting to see, okay, what the second quarter might bring. I would say now they're a bit disappointed with the first quarter results coming out.
And moving, yes, we stay on the line. We appreciate that. Now, if you look at the bond market, why do you think with the Naira's stability over the past few weeks, as it were, at least at the interbank foreign exchange market, not slipping below the 200 Naira brackets, do you think this serves as a form of encouragement to investors who are looking at Naira-denominated sovereign bonds?
If I get your question right, you're asking why the Naira appreciated a bit this week?
Yeah, Naira has been steady for a couple of weeks, as it were. Was this an incentive for investors who are interested in holding Naira-denominated sovereign debts?
Okay, there's a weak connection between what plays out in the forex market and in the sovereign debt market. I think basically what will inform appetite, increased appetite for sovereign debt is the overall macroeconomic stability, economic stability. In our case, it's oil. If oil prices are going up, then there will be an interest for that. So that's my own take on that. The naira appreciated this week probably most likely because there were autonomous funding in the market. That was the pressure that we experienced in the preceding week in the FX market.
But do you see liquidity surging when we start next week? We're about the middle of the month, and of course there could be a few concerns from investors, local and foreign, about what happens between now and May 29, but more importantly, what happens from May 29 onwards. Are these some concerns?
Okay. If liquidity will be a major concern post undervalued?
Yes.
Okay. I wouldn't say so. I think the markets will experience run of the mill because in spite of because basically the inauguration will boost confidence because of the successful transition to a new government. And already there's already hype in the economy over the Nigerian economy because of expected improvement that will come along with the new government. For the banking sector, there's going to be a lot of confidence, a lot of business coming in because investors are likely to come into the Nigerian market. So I think by and large, we'll see an improvement in liquidity or liquidity conditions, barring any other unforeseen circumstances, such as further tightening by the monetary policy authorities.
So for May 18th and 19th monetary policy meeting, what's your expectation?
You mean in the money markets?
Yes, in the money and the fixed income market. What are your expectations from the central bank monetary policy meeting? Are you looking at some actions with regard to public-private sector, CRR, things like that?
I think CRR on both public and private sector deposits will be maintained. I also think that money policy rate also maintained at 13%. In the market generally, there should be a slight strain on liquidity because of both auctions that will be coming up next week, as well as Treasury bills auction week. In the FX markets, there should still be stability in the market segments. Oil prices are doing well currently, and the reserves have been showing up, albeit slightly, but it's been showing up lately. So we expect stability in the forex market. Liquidity might be traded in the money market, and because of that, at the OTC market, the bonds trading at the OTC market should be hello.
Yes, hello. You're still connected.
The bond market, the OTC market should experience some sort of sell pressure this week. Some bullish activity in that market segment. Investors want to take profits, short-term profit, and there might be some liquidity challenge in the market next week. So that might just also add to sell-offs in the bond market.
Okay. In terms of where Victor, terms of where you see opportunities in the market, looking at equities and the money market, considering liquidity in the money market, interest rates, CRR, do you think the banks, the listed banks, still constitute a window of opportunity for investors who want to take position the marketplace. Do you think the banks are able to manage the money and fixed income situations, circumstances, and able to produce results that should convince investors to say, look, I'm going to hold on significantly to my assets portfolio in the banks?
Okay, banks traded on the floor should be attractive to investors. Many of which have prices lower than even their book value. They also have significant upside, and PA ratios are also attractive as well. Banks should be one of the right for investors next week. And apart from the banks, you also have some other non-banking stocks that also have this kind of these characteristics as well. So there should still be buy opportunities in the market, these markets, regardless.
Okay, Victor, I guess we leave it there at this point. We thank you very much for your time today.
Okay, thank you very much, sir.
We understand how vehicular traffic logjam is today in Lagos, being like that for a couple of days, but today looks exceptionally different with supplies of petrol products to gas stations or petrol stations across the city, as it were. It looks like it's an all-round thing. If you have some nice pictures, do send them to us here on channels. Sorry, we understand you're out there, but we get some interesting. You could just do a bit of citizen journalism. Add that to your research.
Thank you very much, sir.
Analysis and put some smiles on your face. It could just be a TV star sending us those pictures. Okay. Thank you very much, Victor Ophili, Deputy Head of Research at Carry Asset Management. Okay, let's get back to story that is breaking this morning. A suicide bomber suspected to be a member of the deadly Boko Haram. Insurgents have detonated the bomb at the College of Administrative and Business Studies in Potiskum, Yobe State, killing himself in the process and injuring 7 others at the time we got this report. This is something we're following very closely. Those who were injured in the attack this morning are now receiving treatment, according to sources. We will keep our eyes on this story, on the breaking news, and continue to follow that up for the rest of the day for you. Further developments on that story for you here on Channels Television. News track will be at 11, about 15 minutes from now, as it were. So stick around to have an update on that. Let's take a break. When we come back, we'll go back to the markets. We'll take another look at the economy once again and some of the stories we got here for you from within the economy and the markets and, of course, business.